welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with me this morning is Kevin from VPR Ventures. And we're going to get into what exactly that is and what it is that they're doing. But how's it going, brother?
It's going well. Thanks for having patience with my technical difficulties earlier.
Oh man, that's why we get here a little bit early so we can
Yeah.
get the sound right, get the video right. But yeah, I have my own issues with Starlink sometimes, but I'm finally getting fiber internet up
Okay.
here in the middle of nowhere.
I was going to
Imagine
say,
that.
'cause you're out in the woods, right? From what I
Yeah,
understand. All right.
I'm like about 45 minutes from the nearest town. So when I heard that when I caught them out on the road putting in fiber, I thought they were burying the power lines, which is an awesome thing as well.
Yeah.
Because we always losing power up here because the trees falling. But when they said they were installing fiber optic, I was like, "Holy, all right, let's." Because I've been wanting to do crypto mining and start a node and things like that to where I can earn.
Yeah.
But the Starlink is just too unstable for that. So anyway, enough
Yeah.
about me. So
Yes.
Kevin, tell me about VPR Ventures and what it is that you and your team are doing.
Sure. Sure. So VPR Ventures is a litigation finance fund. Most people don't know what litigation finance is, but essentially you can, as an investor in an alternative asset class, you can invest in a law firm, or
Mm,
sometimes invest in a legal dispute. And
mm,
so, me and one of my other partners were both trial lawyers. We've been partners in a trial firm for 10 years, and we have been both trial lawyers for over 20. And then we have a third partner that is a alternative asset financial investor, and he helps us with portfolio theory and all the different things like that. But basically, we look at cases, we see if they're good investments,
mm.
and then we pay legal fees, we pay expenses, we pay the everything it is to have a high dollar lawsuit in today's world. And then at the end, we have an agreement on how, if it is successful, we split up the proceeds with the claimant.
Gotcha.
So,
So I guess my question would be, and I'm sure anybody watching would be, is why would a law firm need financial backing for a case, something that has to do with personal injury or which is what I'm kind of guessing a lot of this stuff is.
well, a lot of our stuff, we look at personal injury. We've done a few personal injury investments, but really ours is our practice level and everything is more commercial, more contracts, that type of thing. And
Okay.
it's not so much that the law firm doesn't want to take on needs the expenses. The claimant can't afford the lawyer that he wants. So we've got an issue where some lawsuits never even come about because the person that has the claim can't
Mm,
afford to hire a good lawyer. And so you
gotcha.
get this disconnect where really it's David versus Goliath, right?
Mm,
So we're funding David, who has a valid claim, against a
mm.
big company backed by a big insurance company. And either he goes out and gets a lawyer that's not as good as those big law firms,
Oh yeah.
or he just walks away from it.
Mm. So
One example.
go
Go
ahead.
ahead.
Go ahead.
Yeah, I thought of two examples that from early in my career before litigation finance that may help the audience understand it. So, one of my first cases, we had a very good business client. He had a successful business, and we helped him with all his business disputes. And then this is in Texas. I'm in Dallas, but north of Fort Worth, they wanted to put TXU Encore wanted to put in a transmission line to
Mm,
feed power through what's called WIZE County into Fort Worth.
mm,
And so they built these huge power lines right at the end of this beautiful ranch, several
mm,
ranches, all the way to Fort Worth.
mm.
Now they can do that. It's called eminent domain. The government can come in and say that people need this. There's a public need, so you can do that. But
Yeah.
then the second element is damages.
Mm,
The TXU Encore got to determine what the value of the land was that they were taking.
Oh, that's BS.
Yes. Yeah. So most of the neighbors, farming, ranching, that's a cash strap business. Most of his neighbors could not afford to go hire a lawyer to go to
Yeah,
trial. Well, he had a relationship with my firm, he had a relationship with us, he could afford to do it. So he filed a lawsuit and challenged the damages that they were paying in eminent domain.
gotcha.
And I remember then at the end, um, well, we could go into specifics, but the expert of TXU actually put out a report that he thought your land value may actually increase if we put a power line across it. And so now, now you've got jurors sitting there going, did he really just say that? And
Right?
everybody in the courtroom's like, he really just said that. And
Yeah.
so I think they took, if I remember correctly, they took the damages that TXU was going to give him and then multiplied it by 5, I think. So he
Mhm.
got quite a bit of an uptick.
Yeah.
None of his neighbors got that uptick because they couldn't afford to pay a lawyer. See, in that instance, we would have paid the lawyer to go to trial. And then
Mhm.
when he got that increase in value, we would have a contract where the value,
Yeah.
some value would come back to us and some value would come back to the claimant. So,
So now that we've kind of detailed what it is that that you and your firm do, basically you have this fund, an existing fund, if I'm correct,
correct.
where you basically are able to draw from that to pay for legal fees and expenses to assist people that otherwise couldn't afford to, like you said, fight Goliath. So I know that I've been talking with you and my brother, and somewhat advising on how to tokenize that fund, with on blockchain, and
Yeah.
make it to where people like myself that are interested in investing can actually invest in your fund through a token or a coin and get dividends or some sort of return on that investment, based on when you win lawsuits and things like that. So walk us through kind of what brought you to the idea of doing that first of all, and then kind of where you're at in that process.
Yeah, I would say it was kind of twofold. Just on the nuts and bolts of it, it is a high yield investment, but it's an illiquid investment for about 3 to 5 years, is what we
Mm.
say, because lawsuits take 3 to 5 years. So when you get in, especially not every investment we do is pre-suit, but a lot of them are pre-suit. So like we're there from the beginning when they're filing the suit, and then they got to go through motion practice, discovery, then all the way through appeal. That could be a 5-year investment.
It's a slow.
It is. It is. Yeah, it's worth it because you're getting multiples on your money when it does monetize. But a lot of our investors were saying the illiquidity of this investment is a piece that they didn't like. And so when we learned about tokenization of real world assets, it was kind of an aha moment that this could, if structured correctly, this could give some liquidity to certain investors through, like you do with DeFi, borrowing against it, and maybe even do that in a fractional way. So you're not borrowing against your whole investment, but a portion of it. And
Mhm.
then the thought is if there is a secondary market that builds up around a token,
There is.
then they could easily sell that. And we have KYC and AML and different things we've got to work through. But then that person, if they want to monetize that, maybe even if the case is going really well or the portfolio is going really well, they've already appreciated some of the value in their investment and they can sell that then. And so
Mhm.
that was kind of the nuts and bolts of it. Then
There's
the other piece,
actually a platform that does something similar to that. It's called Pendle, where they break out the yield bearing aspect of the token, and you can basically buy and sell and kind of trade that separately from the principal. So we won't dive down
yeah,
that, but
no,
it's something
no,
we can talk about offline.
Yeah, because as we're learning even the word tokenomics and all the different ways you can set up a token, we're slowly educating ourselves and we're getting there. But
Mm.
we see open doors, and we're excited about it. And then the second piece that really I've been thinking through, because largely our investors are high net worth individuals here in Texas. Um, a lot of the other litigation funders are backed by hedge funds, family offices, but we're really a retail fund, and so we already have a democratization kind of structure going. I think if we go on chain, that could even go further, and then it creates this interesting thing. So, what most people don't know is 90%. Don't quote me on that because it might be even higher, but 90% of lawsuits don't ever go to trial.
Mm.
There are lawyers that go through their whole career
Mm.
that never go to trial
Just settling out of
because,
court on everything.
because you go through this whole event, then you end up in a mediation, and then a big company, generally backed by a big insurance company, says, you can't afford to go to trial. The risk is too high. So just take this. And they
Yeah.
get lowballed and they have to go away. So if we really could figure out the tokenization piece. And we've started saying it's David versus Goliath cases. But what if we had Davids funding Davids against Goliath? And then the beauty of it is you've got people funding people with claims against big corporations. And then at the end of the day, you actually get a jury trial. And the jury trial in America is disappearing, like sitting down with 12 people. Sometimes it's six, depending on county courts, but it's 12 people that are very intelligent and making the decision. So then you've got people funding people and being decided by people.
Yeah.
That's what that's the system we're supposed to have,
Mm.
but that's not the system we have right now.
Mm.
So we think the tokenization, on the nuts and bolts and the finance works, and then kind of that ethos of getting back to what a jury trial is supposed to be could be fueled by something like tokenization of this real world asset. So that gets us excited.
Nice.
Yeah.
So, where are you at currently in the process?
So we've got a good team. So our fund one is coming to an end. So because we're set up as like a niche hedge fund, and that those have a life. So you've got a deployment phase, and you got a monetization phase. We're coming to the end of our deployment phase. So we really have to kind of wrap this up and then let it monetize out. And so when we're looking at fund two, we're looking at several different angles to create an evergreen fund and using tokenization to
Real,
fund that.
real, real quick, that term evergreen fund. What does that mean for the audience?
That's where we may not have, if we go this route, we may not have to end it in 5 years. That
Okay.
that then you can reinvest profits and you can keep, and we think that works with the tokenization piece. The token
Yes.
continue to increase in value, and if you want to get out of the fund, you can sell your token while
Mm.
the evergreen fund continues, and we bring on more lawsuits and we reinvest, and then the portfolio continues to grow. So we
Mm.
think there's symmetry there that we're excited about. We brought on an engineer to the team, so now we've got legal, we've got finance, and we've got engineering, and now just trying to figure out the tokenomics, because as we're finding, and sometimes the builders don't capture any value by
Mhm.
the way they set up their tokens,
Mm.
and sometimes the builders have take all the value and they rug pull people. And
Mm.
so we want to find out the alignment that works best for this asset class, because it does have a little longer duration. It's not going to be a pump token of any sorts.
Oh
But
yeah.
we're very close. We're very close. There's actually so many options in this space. It's hard because you have a wealth of different things that you can do, especially with the Genius Act helped a little bit because we could hold stable coins. We're not going to mint a stable coin, but we could hold some of our reserves in stable coin. But then also with Clarity coming, or whatever the Senate has renamed Clarity, When that comes on, I think we're going to have a lot of options. So I think first part of the year we should be launching a token, hopefully.
Nice. And so I know that I was on a show yesterday with Mario Newfall, and there was a group on there called GBM, and it's an interesting project. And I know I kind of turned you onto that for a
Yeah,
potential place
yeah,
to
I was
launch.
looking.
Oh, so you actually checked that out, or
Yeah, yeah,
okay?
it looks interesting. It's as I understand it right now, you can have an auction pre-launch to help you price the coin and help you structure
Yes.
your token economics.
It
So
it it eliminates a lot of liquid or value extraction or liquidity extraction that happens with a lot of tokens currently. So the issue with a lot of tokens these days is that when it first comes out, you have the team, you have VCs, you have all these people, and then of course you have arbitragers and different people that are looking to make money, of course. And
yeah,
so between the sell off of of the team and and how the tokenomics are done, and when those vest and their tokens vest, but there's usually a big pump, a big sell off, and then it kind of slowly finds its price. So what this is hoping to do is actually, before the token launches, allow it to find that price, so that when it actually launches, it already has discovered kind of its range of where it's going to be, so you don't have
yeah,
those violent swings at the beginning.
yeah, yeah. Because something like that would help because at the end of the day, this is a capital intensive investment on our part. We have to raise funds in order to deploy funds. So if the if we don't structure this correctly, the value proposition up and down may affect how fast we can deploy capital into quality cases. Um, so we think something like this, where we can get a look at what things would look like when we do launch, would be good. Um, because the other thing too with the Evergreen Fund, we plan on doing this for an extended period of time. This is not a 1 year project. We're already 3 years into our first fund. We want to continue doing this. There's I won't throw numbers at you, but broadly saying, litigation spend in the U.S. dwarfs the rest of the world. Like we are a
Oh, I'm
litigious
sure.
we are a litigious group of people in the U.S. And the one last stat I saw, maybe it's a year old, but I think maybe 5% of that litigation spend has any connection to litigation finance. So the total addressable market out there is huge. There are cases that need funding that don't get funded. So we want stable capital. We want a good tokenomics where we could even mint more coins to raise more capital. We're working through all of that, and we think something like this pre-launch auction could be interesting.
Oh,
So
definitely, definitely, and it would. I think it would definitely go a long way with like settling people's nerves that might not be familiar, and even people that are familiar with token launches and crypto and things like that, to be able to see a launch of of this fund's token, and see some price history to where it's already gone through a lot of that volatility, discovering that price level, or that price discovery. So historically, and I'm not sure if you have any numbers, but historically, I mean, what kind of what kind of returns have people seen from their investments? And let's just go with that.
yeah, yeah. One group to take a look at if you want to see returns. There's a publicly traded company called Burford, and they're kind of the largest litigation finance company, I think, in the world, maybe. And they do publish some returns, but you're looking at and there's a range here, but
Mhm.
it's definitely an IRR, so that's bringing in time value of money. It's
Mm.
definitely in the high teens, into the high 20s. And then if you really get a portfolio that knocks it out of the park, you can even go higher than that.
Okay.
But the the multiple that you put on the money, because it is expensive money.
Mm.
So it's got to fit the right claim. It's got to be a high value claim, and it's
Mm.
got to work out for the claimant as well, where they say, my rate of success or my ability to even bring this suit increases so much, I will take this this expensive capital in order to fund the lawsuit. But
Gotcha.
they're also getting something for that expensive capital. They're getting another layer of due diligence, because
Mm.
we look at it as trial lawyers, and they're having a lawyer say you have a good case. Well, we
Mm.
come in and look at it and say, no, you have a good case. And so
Yeah.
they get that due diligence.
Well, you
Um,
look at it from a legal aspect and an investor aspect. So it's you're looking at it from two separate angles, as opposed to some lawyers that might take a case just because they think that, oh yeah, I can take this case, they'll settle out of court, I'll invest this much time to get to that point, they'll settle out of court, I'll make my cut, they'll get their cut, and off we go. Whereas
yeah,
you guys obviously with this fund are expecting that it's going to have to go to court, and it's going to be a long drawn out battle, and we need to kind of crunch the numbers and see if the payout is worth the risk of potentially not winning the case.
yes. I've looked at many, because I've done in my practice contingency cases where I'm putting in my time, and I'm evaluating the risk on whether I'm going to get paid back at the time of winning this case. That I've looked at cases where I said, as a contingency lawyer, I probably would take this case, but as an investor, I can't take this case. And it would bore you to tears, the nuances that go into that analysis. But there is a higher level of due diligence that we put in there. But the other thing about it just being expensive capital, you got to really think it is, because not every lawsuit's going to win. So it does have to kind of take on some private equity type things where the winners are going to pay for the losers, and you've got to design the portfolio. So yeah, but the IRRs are very healthy. And something else, a comparison that we get to is like real estate investment. And
Yeah.
people will do that as an alternative investment, usually like through a REIT or something like that. And
Mm.
where our investors have been burned is they say, okay, I'm going to go in and we're going to redo this apartment. We're going to increase rents, and then we're going to
Yeah.
sell this asset. But
Yeah.
then you have a manager that sits over this asset, and they keep telling the investors, this is not a good time. The market's not right.
Yeah.
Like, the market's not right. So now this 5-year investment's turned into 15-year investment waiting on market conditions. We don't have that with this investment.
Yeah.
When a case is filed, there's a judge that's going to keep a scheduling order on time, hopefully,
Mm.
and they're going to drive to trial. And we're hoping we get to trial on time. And then when that monetizes, either through appeal or jury trial, then we return capital to the investors. So they do like that.
So what exactly is going to drive? I'm pretty sure I know, but I definitely want to put it out there. What exactly is going to drive the valuation or the token price, like after launch? In my mind, it would be as you're winning cases and that money is flowing back into the fund, after expenses and all that. Then is it just basically that pot divided by the tokens, or how is the valuation gonna work?
Yeah, we think so. And that's something. So like this is our first fund is essentially like a niche hedge fund.
Mm.
And a lot of our third party administrator we work with says, we got to strike a NAV every so often and show a valuation of the portfolio. But
Mm.
the binary nature of these cases is where it's very difficult to evaluate that. And we
Yeah.
finally have communicated that. But we think that there is something interesting too about using a blockchain so
Mm.
that we can with keeping strategy and attorney-client privilege in check, we can post on a blockchain and show the progress of the case. And so,
Yeah.
if you win certain motions, you can say the case gets more valuable. If you move closer to here, it gets more
Mhm.
valuable. If there's a settlement discussion which tries to start to value the case, that could increase the value.
Mhm.
We're working through that to see as this grows, especially in the first stage. So, what becomes interesting is in the later stages, you're going to have several cases monetizing at several different times. And
Mhm.
so, we will have. Um, we will have some data that can be reflected into the value of the coin.
Well, what I think is cool about this from a DeFi standpoint,
Yeah,
and
tell me, because I'm curious how you would use it in DeFi.
well, it really depends on how it kind of plays out, and then as a lot of these markets like Coinbase and perpetuals, exchanges where they have different RWAs or things like this, tokenized funds and whatnot, being listed on those. There's a lot of different things that you can do with these investments. I mean, one, you can just simply borrow against them.
Yeah.
You can do it just a simple borrow, and as long as the value doesn't drop below a certain threshold, and as far as liquidation, then that's a very good way to access that liquidity without giving up ownership of that asset. There's ways that you can loop with lending. So, basically, like with this, you could borrow against it. With that borrow, you can reinvest in it and then borrow against that and then reinvest that. And, and of course, there's a lot of math you have to do to make sure that you're not over leveraging yourself to where if there is a price fluctuation that it doesn't dip and liquidate you. So the kind of the health of that loan. So I mean, there's a bunch of different things you can do. Obviously, I was talking about before on Pendle, where on a lot of assets they break out separately the yield bearing aspect of the asset. There's I can think of a couple different ways, and it really just depends on where you're able to list it, what you'd be
Yeah.
able to do with it. But I'm kind of excited about it. I guess my big question would be, because I'm not an accredited investor. I mean, is this going to be something that only an accredited investor is going to be able to touch, or?
Well, currently, as we're structured, yes. As we get into there are several things that we're designing into this. The Clarity Act would provide, I think, a lot of clarity to us. We don't, again, I on a live podcast, I'm not going to take any legal opinions whether
Oh, no, no, yeah,
we're selling securities or not.
yeah,
Um, but to do the democratization piece, we think there is a pathway to make this where you are not selling a security is what
yeah.
is one hope, but actually have a legitimate, you know, legitimate sound reasoning why this is not an asset. So,
Mm,
the way you set up a synthetic asset and tokenize that, and then that's separated from the fund. But then you start to look at some old case. I think Howie's from 1946.
yeah,
And then you look at the current regime and things that the current regime is saying, but when that changes, because we don't want to, it does bring in some complications. But we think there likely is a pathway where you're investing in a law firm and it is set up and structured in a certain way where it could be open to a wider audience. Yes, that's
I
our
would
hope. That's our hope.
I would definitely like that, because this is definitely something, because I'm more of a I like to invest. And that's why I love DeFi so much. Is I'm able to invest my liquidity and just earn a yield on it. So it's basically a high yield savings account for the most part,
Yeah.
and use that to augment my income being retired. Um, but something like this would be perfect for me. It's something that I could invest in. There's money that flows in from time to time. I could, use it to DeFi potentially, and borrow against it to invest in other things, and of course at a low rate, at a loan to value, depending on how volatile the asset is, and things like that. But yeah, I mean, just it's a really interesting use case for blockchain technology, and it's kind of what made my ears perk up when Taylor introduced us, and it kind of sucks that trip to New York didn't pan out.
Yeah.
I was looking forward to going to that RWA summit out there.
Yeah. Yeah.
What was it, Centrifuge? And
Yeah.
yeah, I don't know what it was. I kept hitting up the lady that kept denying us. We had plane tickets, hotels, everything, and yeah, she just could not. It just would not register with her. I'm like, I have a huge audience and could bring a bunch of attention to
Yeah.
this event if you just let us in the door. We'll pay for the tickets, just let us in the door.
Yeah.
And she just wasn't having it.
Yeah. I ended up going, so I got a ticket to it.
Oh,
But
nice.
I think it was very TradFi focused. So
Mm.
um, I felt like that was, I think they do several a year, or they do one at least annually. And I think this one was TradFi focused. But it was a good summit. It was interesting. I learned a ton. But that kind of brings me around to, you've got all these different camps, and just as we were talking about, I don't think people that are in the DeFi community are going to put all their assets into this, but I think they could take some of their on-chain assets and put it into something that's backed by a high yield potential return.
Mm.
But what I know, you've built a community.
Oh yeah.
Um, how would you? What advice would you give us in building out a community? Because I know market makers can come in and they
Mm.
can provide liquidity to even a smaller group, but then they're going to take a large percentage. How how would you organically build a community around something like this?
Honestly, that's the beauty of tokenization is you have platforms like Nest, that's on the Ethereum network, and other compatible EVM chains. It's on the Plume network. And actually, you know what? I'll bring it up real quick and show you. So you have Nest protocol. Obviously, that one auction is a
Yeah.
great way to spark initial interest. But let's do this real quick. So this is Nest Protocol by Plume,
Okay.
and but you have Blackstone, Mineral Vault. There's a bunch of huge institutions, and these are funds. So they're baskets of funds. Some of them. So like this Nest Alpha, you can earn 23.3% on this, and it's a Black Opal, Mineral Vault, Kasu, and it's American Oil and Gas, payment financing, and private credit. And so basically, you can just provide liquidity to this and simply earn this yield.
Yeah. Yeah.
And so there's all kinds of platforms like this where you can list, your offering, and it just opens it up to where anybody with and of course if it's something that they have to be an accredited investor and stuff like that, they'll have to go through that KYC and that sort
Yeah.
of thing,
You
which
could
is
put
all done.
guardrails around it. Yeah.
Yeah, and it's all done on chain. It's nothing that you would have to do as a group. It would just that's all that's built in, as to the tokenization process and on chain, and they have to jump through those hoops. But that's one way. Obviously, you have your kind of guerrilla marketing, like coming on shows like this.
Sure.
um but yeah, I mean, for the most part, you're getting in so early that getting listed is probably your best exposure to liquidity providers. Having liquidity pools, to actually generate instant liquidity. So basically just DeFi platforms. where you can, like Morpho comes to mind. It's a platform where you can borrow and lend. You got Moonwell, which is on the base network. I know that your developer is obviously knows what he's doing because he's building your project out on the base network,
Yeah,
potentially on
like
Coinbase. Aerodrome is a huge one. So I'll go to that real quick. Aerodrome is straight up liquidity pools. So you can come on here if it will load. And they're actually launching a new platform Q2 of next year. They're combining with Velodrome, and they are going to be a lot of their functionality is going to be native on the base network and allow
okay,
a lot of retail that don't understand the complexities of DeFi to access DeFi. So basically what you can do with this is you can start a liquidity pool. So,
okay,
basically the pair would be your token and then maybe USDC or, Ethereum or Bitcoin or something like that. People could deposit their liquidity to earn a yield. Like this one right here is wrapped ETH and Arrow. And you can deposit into this and you earn 31.42%. And basically what it's doing is providing the liquidity for people to swap between two assets. So your
okay.
token and the other token. So whichever direction they swap, the people that provide liquidity earn like 0.03% or just a small transaction fee that goes to them. So that's another way that you can generate liquidity. So
Yeah.
there's a bunch of different ways that you can go. Oh, excuse me about this.
No, that's what's told. I mean, we're talking to a lot of people in this space, like, as I said, just trying to learn. And everyone tells us directionally, you're right. Directionally, everything. I mean, we say crypto, but really the digital finance world is going to happen.
Yeah.
Um, Now, are we too early? I don't think we're too early. I think this is a great time. And really it just became in our natural process. We're wrapping up fund one. We're going to move into fund two. Do we replicate the same niche hedge fund, or do we go into this evergreen and be on the front end of this? And we think the technology is sound enough that we can do this, protect our investors, protect our interests, and find a way through, and then kind of see where it goes. See where it goes.
Well, and the great thing about building on chain is compliance. So being
Yes.
on chain, depending on how you build it out, it's fully upgradable. So as regulations change, there's automations to where it would automatically update. So like if KYC, if a new step or requirement was drafted in and signed into law, then on platforms like Nest and Plume and things like this, uh, it would automatically require that. As soon as it became law, it would automatically require that, and it's not something that you would have to manually keep up with, and so it just makes things so much smoother.
Yeah.
Having things on chain.
Yes. Yes. No, we're excited about it. We think that the efficiencies, the transparency, all of those things are what's supposed to be brought to you by traditional finance, but are not always brought to you by traditional finance.
And the
So,
DeFi aspect.
yes, yes,
Because I know me myself. If it was a very good performing investment, I wouldn't want to sell it. But it doesn't mean that I don't want to access that liquidity. It doesn't mean that I don't want to borrow against it, potentially tax free because it's a loan, it's debt.
yeah,
Not financial advice. Talk to your accountant, all that
sure,
stuff.
sure. Yeah,
But um, it would be nice to be able to access that liquidity without having to sell the asset and be able to take that and potentially buy more and then
yeah,
use the yield that I earn from the fund, from both of those, chunks, the initial chunk and the secondary chunk, to pay off the loan, and then rinse and repeat. So basically I'm just, basically leveraging my position to grow my investment.
Yeah. Yeah. No, the concept makes sense. Like I said, sometimes we get into there's so many options in the design, which is a good thing to have, and we're telling ourselves internally, let's think it all through. Let's choose a path, and then obviously we're going to have to iterate as technology changes and the law changes, and we can navigate our way through, always keeping the alignment between, you know, the builders capturing value, the investors capturing value, and then at the end of the day, the claimants having value. So the claimants being able to bring a sound lawsuit, and not be scared away from trial, and that they can follow this all the way through. Because the other thing too, and this doesn't get talked about that much, but a lot of our law is based partially on statute, but partially on case law. And so when you always have Goliath beating down David, you get lopsided case law. And so
Yeah.
David's position gets worse and worse and worse. If we brought the Davids up a little bit, gave them very good lawyers, then the case law gets better. So it improves, it improves the legal system. It improves, hopefully, the financial system, and giving a unique asset to more people. We
Yeah.
just see there's a lot of benefit here. And
Absolutely.
we don't say that it's like a white hat investment, because we stay away from certain lawsuits, but we want to our first criteria is to monetize this investment. But
Mm.
it does feel good sometimes when you find that case where it's a good cause, it's holding people accountable, it's bettering, it's not good for the business environment either if people are allowed to breach contracts. Um, I mean, one other story, and then I know you've got a hard stop, but one of my earliest cases, I was a first year lawyer, uh, uh, and I think this may help people think about this. So, this small group outside Atlanta, Georgia, it was two guys. They got a contract to sell scooters that were made in Taiwan. And
Mm.
so they had a 5-year term. They set up a small business. I mean, these aren't nice scooters, but they're scooters, and they're
Yeah.
selling it as a corollary, I think, to their lawn or tractor business. So
Mm.
they're selling these. Well, then the Taiwanese company decides they want to go with someone else. I think their cousin moved to the US. And so the Taiwanese company said, well, those guys outside Georgia, they're not going to be able to do a federal lawsuit. So they sue them, and they found a connection to federal court in Dallas. So now you have these small business guys outside of, in Georgia being sued in federal court in Texas. And somehow they found my law firm and they found me. Now I'm on the defensive position. They came up with a reason to sue the smaller guy. So he's paying me hourly and I'm defending. Well, eventually we fought so hard, the Taiwanese company got tired and said, I'm leaving. But the
Eh.
court said, you can't leave. You started this lawsuit. So
Oh
we
no.
had a trial. We had a trial, and these guys outside of Atlanta won $46 million against the
Oh,
Taiwanese company.
damn.
But the execution of that judgment makes it valuable. Having that judgment is only the first step.
Yeah.
Litigation finance I mean, it was not around. This is 20 years ago. And
Oh,
so we
okay.
do some investigation and we think, oh, that Taiwanese scooter company is actually a subsidiary of a big steel company in Taiwan.
Mm.
This is a good enforcement action, but it's going to cost you, small business in Georgia, this amount of money to go to foreign country and enforce this judgment.
Mm.
And because there was no one that could help them monetize that asset, because here's the other thing, you can't go to your banker and say, hey, this lawsuit or enforcement of this lawsuit's worth money. Can you lend me money? Because the
Mm.
banker will go, I don't know. I don't know what I'm looking at. How do I do
Yeah.
diligence?
How do I value this?
Yes, but you could come to trial lawyers that have set up an investment company And at this point, I would love to file that lawsuit or enforce that lawsuit, but they just held that case. I actually circled back with them, I think 10 years ago, and talked to them about, hey, there's this new thing called litigation finance. I think we can enforce your judgment. They'd revived the judgment and kept it alive. But by that time, the steel company had gone away. They had filed, for bankruptcy. So they missed their window to enforce this judgment that they
Mm,
fought hard to get because they just didn't have the money to keep going. So,
gotcha.
um, so no, that's one of those. I would have loved to take that all the way through, um,
Mm.
but there just wasn't a mechanism, and now there is a mechanism to do that. So
Well, I think that's a great place to leave this off. But I definitely want to do another have you back on when you're a little closer to launch,
yeah,
and let's discuss kind of the tokenomics, what your team's plan is as far as launching it, and kind of places potentially you might list it that would allow for DeFi or something like that. And then, of course, the big question is going to be for a lot of people, is there a way to, invest in this that and not be an accredited investor? So,
yeah. No, we'd love to come back on when we've kind of finalized our path, and love to talk to your audience about this being an option. Obviously, the DeFi community is not going to put everything in, but I think it
Mhm.
could be interesting to put a percentage of what you have on chain into something like this. So
it's only growing. Even with the way the markets, the terrible markets that we're having right now across the
yeah,
board. Um, just going to my go-to RWA.xyz, just currently, tokenized assets, it's a, almost $36 billion TVL.
yeah.
And, it's fledgling. It's brand new.
And
So,
that's one other thing I didn't mention about litigation finance. It is an uncorrelated asset to the market.
mm,
So this is, and that's why a lot of our investors like it, is their market positions may go up and down, but this is separate from the market. We actually say it might be anti-cyclical, that when companies start to hurt, then we see a rise in good fraud claims, because I think Buffett said
so,
when the
so
tide goes
a
out,
reverse correlation.
yes, when the tide goes out, you see who's been swimming naked.
Oh
Those are
yeah.
good. Those are good lawsuits. So this could, it could be an interesting investment on several levels for people. So
So it might be more profitable in a bear market than a bull market.
it might be.
All
So
right. Well,
uh,
thank you again, Kevin, for coming
sure.
on. I know it was a little bit short notice, but this is just something that I'm very excited about. Is just obviously being in DeFi organization of the traditional markets.
Yeah,
Making things that are illiquid more liquid, getting rid of intermediaries, automating a lot of these processes, opening up, fractional ownership, opening up DeFi opportunities to where, again, you can, borrow against these assets where before, yeah, that wasn't even a thought in
yeah,
people's minds. So
yes,
all of this is very exciting. If
yeah,
you're into, decentralized finance and, this blockchain technology, but again, thank you, Kevin.
yeah. Thank
And,
you.
yeah, we'll talk to you soon.
We'll do it again. Thanks.
All right. Take care, brother.
All right. Bye.
Yeah.